on, Seth?
Feeling
Shaun.
good. Feeling good. Deals of the week. Missed you guys last week, but here we are. We're moving along, right? You guys.
What's with the low E, man?
Yeah.
Oh, me?
Pick it up.
What's with the low E?
I feel good. I might have used it all in the last 2 weeks. I've been feeling really good lately.
Yeah, we're signing contracts, aren't we?
I've been feeling really good. Yeah. We had a big 10-day period where we signed 4 rent stabilized contracts. So I feel really good about it.
I feel like we're finding a floor there. I feel like this is the time we're starting to see the very looked up to players start to get back into that market. Heads up, everyone.
Yeah, totally. So we closed on this deal. What was this? Last week we closed on this. This is in Marble Hill, overlooking.
Not the Bronx, right?
Not the Bronx. Not the Bronx. These people vote in Manhattan. We sold this for $12.2 million, about a 5.5% cap rate. You know, we were under contract for 119 days. I think we closed the day before the 120th day TOE. The nice part about this building is that 28% of the units were free market, and the average rent in these units was $1,400. So the buyer who owns a building nearby knows the rental market over here really well, and so he's got really good comp data where he felt the market rents were well under market. This building, 60 of the units were de-leaded. So in today's day and age, when it costs like $10,000 to go de-lead every apartment, that was one of the most attractive things for him. So you can see here, beautiful big building, no local law 11, no elevator expense, fairly nice sized apartments. You can convert the 1 bedrooms to 2 bedrooms. So I think the buyer is going to do ultimately very well here. 93 apartments he bought from a long-term family.
So this traded at 8.5 times the rent, 5.5% cap rate on real expenses.
Yep.
And it was a former deal of the week that anybody could have bought. And this one probably looks pretty good in the rear view mirror.
Yeah, this is cheap. And the taxes went down, after he signed the contract. So you get a little free bump there.
Yeah, we're seeing that on a few deals right now.
Yeah, so that was helpful for him. That was a good deal. All right,
So,
Joe.
Moving on downtown to Chelsea, another corner property that were on the market. This was on the market about a year and a half ago for $50 million. This is an opportunity now to buy the property for $32.5 million.
So we're going from 50 to 32 and a half. That sounds like
you heard me right. And fully renovated free market units, 80% free market upstairs that are fully gut renovated with latch and some other technology. You can see the level of renovations.
This is nice.
Very impressive.
Really nice.
Renovations. They're smaller units, but it fits well in this neighborhood. And you're getting $90 to $100 a foot for these smaller, studios and 1 bedrooms. The retail is vacant, and it's been vacant. They have leases out with a few different restaurateurs. Cook shop next door pays north of $200 a foot, from what our understanding. And you now have an opportunity to buy this for a 5.5 cap on a conservative projection for the retail.
Yeah, I think the key linchpin to this property is one location. You can see the high line. The high line is right in front of the property.
Yep.
It's a great marketing standpoint for any retail tenant to do the sidewall accessory signage as well. And it just comes down to leasing the retail. When you lease the retail, and this is completely in place cap rate, it probably sells for 100 basis points lower than you could build into. And it's a trophy location that will always, achieve a trophy like price. This is a moment in time where people have to accept certain pricing realities, and we think this is a good time to jump in on something like this.
Wow.
And a year and a half ago, we had offers north of 40 million. Yes, debt was a little cheaper, but now you can see where we are in terms of pricing level.
Yeah, it's interesting. I like these free market assets where you have kind of lower rents, right? $3,000 is your average rent. These aren't $7,000 rents, right? Where you've got a long way to go below you. This feels kind of right, and your taxes are 20% of your gross. So there's
just to be clear, one of the buildings is tax class protected, as it falls under 10 units. So that's also attractive as well.
Interesting. Okay, nice. Interesting opportunity, Joe.
West Chelsea.
Right. West Chelsea, Riney.
Moving on to Brooklyn.
217 Hancock Street.
So this is a nice piece we put on the market today, and it's priced right. This is another one of these hybrid, mostly free market, partially stabilized, 10-unit brownstone on one of the prettiest blocks in Bed-Stuy. So this, would probably be double the price per foot if it was just vacant in the shell, and would be converted to condo or single family or some variety of that. So I like these because, one, you can buy this at an in-place 6.5% cap rate. It's a 7,000 square foot property. It would be double in value if it were vacant or completely free market. And what's the downside? I don't really think that there's any downside here. And then you can start exploring the upside, which is, 6.5 to 7% starting day one yield on cost, with still some rent stabilized, just general upside in a building that looks like a brownstone. It is a brownstone. So you can still do some value add touches here. Great 1031 exchange for somebody in this price point range, and just a fantastic opportunity at a 6.5 cap, which, historically over the last 10 years, this type of thing would not be available for anything less than a 5.5 cap.
Yeah, these are the best opportunities. You put into contract, what was it, 45 days ago on 3rd Street, 4th Street, something else, like one of these in-betweeners where you kind of have half stabilized, half free market, and there's no real identity to the building. You know what I mean? Like you're kind of in between buyer pools, and the price is lower as a result of that.
Correct. I think boutique-y, partially rent stabilized buildings in good areas that are run well and don't have whiny tenants and are just going to stay occupied, not have to pay the broker fee, not have to lose the free month in rent with sitting vacant. Those can actually really produce an income, and you're still buying it at a discount to the fully free market price per square foot basis. So, you can probably get into that with $1 million in cash at that full asking price, day one on the market, perfect exchange property. Let me know if you want to explore more.
Cool. All right, guys. See you next time.